This is the Capital Markets on Channels Television. Hello and welcome to the program. I'm Edidiong Nwang. We'll begin the show with a review of the markets this week. The local sub-market was not immune to the rout in global equities as the market suffered its fourth consecutive weekly loss amid growing concerns about the rising yields in the fixed income market. The all-share index fell below the 40,000 psychological mark, declining by 0.96% week on week to close at 39,799.89 points. Now that brought the year-to-date return further into the negative territory, settling at minus 1.2%. However, activity levels were strong as trading volumes and value rose by 25.3% week on week and 13.3% week on week, respectively. Sell-offs in large cap stocks such as Nigerian breweries, Lafarge, MTN Nigeria, and Dangote Sugar drove the weekly loss. The sectoral performance was broadly negative, except for the oil and gas and banking sectors that posted gains. The insurance, consumer, and industrial goods recorded losses. At the unlisted securities market, the NSI also declined for the week by 49 basis points, while the market cap stood at 512.24 billion naira. About 370,000 units worth 31.62 million naira were traded in 26 deals for the week. Moving to the fixed income market now, the bond secondary market turned bullish as average yield declined by 18 basis points to 9.2%. Analysts attribute the drop to improved market liquidity following the payment of the February 2028 bond coupon and speculative demand from investors in anticipation of higher market yields. Now, across the curve on the bond market, average yield at the short and mid segments contracted, while investors continued to upwardly reprice long-dated instruments. On Friday, there were 16 deals worth 6.70 billion naira. To the Treasury bills market now, the Treasury bills secondary market ended the week on a bullish note, following system liquidity boost. Now, the average yield across all instruments declined by 21 basis points to 3.9%. Across the curve, local demand for OMO instruments sustained the space's bullish performance as the average yield fell by 27 basis points to 6.1%. There were 34 deals in the OMO market on Friday, worth 118.10 billion naira, while at the Treasury bills market, there were 6 deals worth 4.33 billion naira on Friday. So our conversation now, the Association of Securities Dealing Houses of Nigeria is advocating for an enabling environment to enhance healthy competition. Now, ASHON, which proposed some policy measures to stimulate activities in the commodities exchange's value chains, is arguing that the injection of 50 billion naira into the Nigerian Commodity Exchange by the Central Bank of Nigeria is capable of creating uneven competition among commodities exchanges in Nigeria. Now, this comes after the CBN, which is a majority shareholder of NCX, announced its repositioning plan where it will inject 50 billion naira to bring the exchange to standard to play its role in agriculture development. Well, David Adonri, the Chief Executive Officer of HighCap Securities Limited, joins us now to talk more about this. Good evening, Mr. Adonri. Thank you for joining us on the program.
Good evening, Edith Young. It's always a pleasure being with you.
Well, let's just start with your reaction to the announcement by the CBN Governor, Mr. Godwin Emefiele, that the federal government will inject a 50 billion naira lifeline into the Nigerian Commodity Exchange. What do you make of that?
Well, the decision by the Central Bank of Nigeria to recapitalize the Nigeria Commodities Exchange by injecting whopping 50 billion naira, in my own opinion, is flawed and also ill-conceived. It is actually part of the discordant tunes which we are getting from different sections of the federal government. Because while the federal government right now is trying to offload its non-performing assets, it's surprising that CBN, which is another section of government, is pumping public funds in that volume into a moribund enterprise of government. You know, the records have shown time and again that the Nigerian government is incapable of running any commercial enterprise sustainably. So one may even ask now that what happened to the initial capital that was injected by the federal government into the Nigerian Commodities Exchange. So I'm seriously in doubt if public finance can actually make a positive difference to the fortunes of this commodities exchange, because bureaucracy and nepotism will still kill it on the long run. And so the best option now is for it to be privatized.
Okay, what are the implications for the development of the commodities exchanges in Nigeria? Like, what are the implications of this injection of money for the development of other commodities exchanges in Nigeria?
You see, Edidion, selectively empowering an enterprise in an industry with public resources is not how to build a competitive economy. You know, government ought to focus on the macroeconomy of this country and leave the microeconomy to individuals and private businesses to deal with. The involvement of government, both as a regulator and participant in the agricultural value chain, is a destabilizing factor to the economy. It gives unfair advantage to some participants, which may eventually ruin the entire industry. And now, with the emergence of commodities exchanges, the participation of government in this space is no longer tenable. So, and this is so because if government participates, it alters the level playing field that ought to be there to enable enterprises compete without a hindrance. We can even look at it that the rescue package in itself is not a right step in the right direction. If you consider what President Obasanjo did in the past, when he kind-heartedly pumped about 16 billion US dollars into the ailing NEPA with a view to revamping it. But at the end of the day, that enterprise could not be turned around. All that money went down in drain. So let us not see the same thing happening to the Nigerian Commodities Exchange that ordinarily will fare better in the hands of the private sector.
So what should be the roles of the private sector now in promoting commodities exchanges, for example, the Nigerian Commodities Exchange?
Well, you know, in 1986, the federal government of Nigeria came up with a wonderful program, the Structural Adjustment Program. And under that program, the Nigerian government steadily started moving away from participating in the commercial land space of the country. The federal government started moving into the area of delivering social goods and services, leaving the private sector as the engine room of the economy of Nigeria. And so I think the entire value chain of the commodities business, spanning from farming and mining to the commodities exchanges, ought to be the exclusive preserve of the private sector. Because good enough, the private sector is now developing capacity, especially now that more commodity exchanges have come on stream. We have the AFES Commodities Exchange in Abuja that is operating. We have the Lagos Commodities and Futures Exchange that has just come on stream. We have Gezawa Commodities Exchange that is information in Kano. And when these commodity exchanges gather momentum, the Nigerian Commodities Exchange will not be able to compete with them. We have to take a cue from what happened in those days to NITEL and Nigeria Airways. Because when the aviation and telecom industries were opened up for competition, those enterprises could not just simply compete. They went under. And if you also look at what is happening now, everybody is clamoring for the privatization of NNPC. The failure by government to privatize NNPC and fully deregulate the energy industry has so far put the Nigerian economy at serious handicap and competitive disadvantage in petroleum value chain. In fact, in the commodities ecosystem now, we have many private participants like the commodity exchanges themselves. We have miners, we have farmers, we have aggregators, we have logistic companies, we have warehouses, we have certification agencies, we have central counterparties, collateral managers, banks, and even insurance companies. What is the government doing to support these elements that operate in the commodities ecosystem? So I think selectively favoring one of the participants may not augur well for the overall development of the entire value chain. Edidio.
Well, you've given some examples of when government intervened in some public companies and that didn't work out. I mean, with the 50 billion naira being injected into the Nigerian Commodities Exchange, how deep are the issues that you think that injection will not position the Commodities Exchange, to be able to compete with other exchanges?
Well, the major challenges that, first of all, bedevil the Nigerian Commodities Exchange in Abuja are the ones that we in the public are not really very privy to. But we can observe certain manifestations in the activities and perception of that exchange. For instance, the operations of the Nigerian Commodities Exchange is shrouded in secrecy. I have never seen a publication of their price list or even publicity about their operations. And so that Nigerian Commodities Exchange is showing manifestations already of mismanagement, possible corruption, and perhaps undercapitalization. You see, there are these manifestations which I just reeled out are symptomatic of the fact that the exchange may not have been run under the principles of good corporate governance. It may have been run under the bureaucratic system of government, which is a panacea for corporate failure because it epitomizes, bureaucracy at the worst form that leads to inefficiency, lack of proper marketing, in fact, marketing laxity, and cost ineffectiveness, which are issues that bedevil corporate, government agencies. So those are the things. And if you look at the Nigerian commodities landscape, it has not been competitive. And the reason is because it has been informally organized. In fact, it has been unorganized. And so now that other privately sponsored commodity exchanges are coming on stream, it means that we are now coming up with a machinery to formally organize our commodities ecosystem. And with the commodities exchanges coming on stream, it means that Nigerian commodities will now undergo standardization, and they will now be able to compete internationally in terms of pricing and also in terms of quality. So those are some of the issues at stake.
Well, those are some, very strong words you use in describing those issues. Hopefully, with other exchanges coming on board, the Nigerian Commodities Exchange will be able to, leverage that as or be position itself to be better equipped. But we'll take a quick break now, and we'll continue this conversation when we return in a moment. Please stay with us. Welcome back, and thanks for staying with us on the program. David Adonri, the Chief Executive Officer of HighCap Securities Limited, is still with us on the program. Mr. Adonri, how can the commodities market in Nigeria, position itself to be able to compete with other commodities markets globally? I know we have a major issue of, education or awareness of the commodities ecosystem in Nigeria generally. So how can, we in Nigeria, the commodities market, position itself better?
First of all, I like to state that the underdevelopment of the Nigerian commodities exchange ecosystem has actually been a reason, the missing link, in fact, why the Nigerian commodities market has not been able to compete internationally. You see, the issue of public enlightenment is there, but I think that is being overcome now with the AFEX Commodities Exchange putting its operations on the virtual channel for people to see every day as the prices or events unfold on their platform. And also the Lagos Commodities Exchange that has just taken off is doing a lot of publicity and enlightenment. But coming to the issue as to the international competitiveness of the Nigerian commodities market, you see, before now, the commodities business in Nigeria has been done informally, as a result of which the products have not been standardized and the pricing method has been opaque. And because of lack of standardization, the quality assurance has never been there. And so now, with the emergence of the commodities exchange ecosystem and being a system that is highly regulated, it is now possible for quality to be assured, for products to be standard and be acceptable to the international community. And so with time, as these new commodity exchanges gather momentum in Nigeria, and then the commodities business is formalized, that is that the informalities in commodities business in Nigeria is made a thing of the past. We will now have a situation where Nigerian commodities, when I talk of commodities, Edidion, I'm not just talking of agricultural commodities, I'm also talking of minerals, because what the commodities the ecosystem is all about is in standardizing both the agricultural and mineral commodities that Nigeria can actually make available to both domestic use and also sell to the international market. So when we now have standardization and quality assurance, which are the hallmarks of a formal commodities ecosystem, then we will start becoming competitive both domestically and internationally.
Also, until all these are put in place, what's your outlook for the commodities market this year?
In 2019, for instance, we had only one commodities exchange operating in Nigeria. That is AFEX Commodities Exchange based in Abuja. Of course, the older Nigerian Commodities Exchange has since been moribund. It has not added any value to the commodities space. And in 2019, AFEX was able to trade over 20 million metric tons of commodities in Nigeria through the formal market platform. So I also believe that, well, of course, in 2020, I don't really have the figures, but I think their performance may have been a little below that of 2019 because of the disruptions of COVID-19. But in 2021, now that the global economy together with the Nigerian economy are opening up, I believe that with the emergence of the new commodity exchanges like the Lagos Commodities and Futures Exchange, and perhaps also the coming on board of the Gezawa Commodities Exchange in Kano together with AFEX, I think that space will become more vibrant from this 2021. But we may be overly optimistic in this 2021 because all our projections may be derailed by the deteriorating state of insecurity in the rural areas of Nigeria, because, you know, commodities business is actually rural based. The rural economy has a great role to play in facilitating the viability of the commodities business. And so if the insecurity in the rural area continues to damage the rural economy, then our projections may just fall by the wayside. But again, I think in terms of policy, the federal government has especially the Central Bank of Nigeria, has done a lot in coming up with policies to encourage or facilitate activities along the commodities value chain. We give them kudos for that, although we believe that the support should be dispassionate. It should spread through the length and breadth of the commodities ecosystem. But one thing I want to suggest to the federal government, Edidion, is that to encourage Nigerian commodities and make that the space viable, the Nigerian government can come out with policies to take a cue from what is happening in Ethiopia, where the Ethiopian government has designated the Addis Ababa Commodities Exchange as the sole platform for the export of coffee, which is their major export produce. Nigeria has a lot of export produce and commodities, and Nigeria can actually designate all her commodity exchanges as the sole export platforms for the solid commodities. So if this is done, it will guarantee the viability of the commodities exchange value chain.
All right, Mr.
And also make the Nigerian commodities system very viable. Thank you,
Mr. Donry. Thank you so much. I'm afraid we've run out of time, but thank you so much for coming on the program. David Adonri
always my pleasure.
Is the CEO of HighCap Securities Limited. But the Vice President of Nigeria, Professor Yemi Osinbajo, has lent his voice to the issues surrounding the recent ban on cryptocurrencies transactions by the Central Bank of Nigeria. But speaking at an economic summit yesterday in Lagos, the Vice President says that there should be proper regulation and not an outright prohibition on the digital assets by the CBN. Let's take a listen.
I fully appreciate the position of the CBN, the Securities and Exchange Commission, and some of the anti-corruption agencies on the possible abuses of cryptocurrencies and their other well-articulated concerns. But I believe that their position should be the subject of further reflection. There's a role for regulation here, and it is in the place of our monetary authorities and SEC to provide a robust regulatory regime that addresses these serious concerns without necessarily killing the goose that might lay the golden eggs. So it should be thoughtful and knowledge-based regulation, not prohibition, in my view. The point I'm making is that some of the exciting developments we see call for prudence and care in adopting them, and this has been very well articulated by our regulatory authorities. But we must act with knowledge and not with fear.
Well, meanwhile, the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, has been defending the bank's decision to ban all accounts used for cryptocurrency transactions. The decision of the CBN is also being hailed by the Securities and Exchange Commission, the Independent Corrupt Practices and Other Offences Commission, and the Nigeria Financial Intelligence Unit as a step in the right direction. They put this defense when they appeared before the Senate Joint Committees on Banking, Insurance, and Other Financial Institutions, ICT and Cybercrime, and Capital Market. That's all on the program tonight. Thank you for watching. I'm Edidion Iwang. Do stay safe.